what we've seen is in August, quite a busy month for sellers across Australia and a particularly busy end to winter, particularly in Sydney and Melbourne. What we saw nationally was a bit of an increase in the number of new listings coming to market. There are about 20% more new listings hitting market in August than we saw in July, which is a pretty big increase. Now, we normally expect to see an increase in August. July is very quiet for midwinter, but it was larger than we typically see.
So there's been a rebound in listings led by the Sydney and Melbourne markets. Are all capital city markets reporting an increase in properties for sale?
Yeah, that's right. The increase that we saw really was led by Sydney and Melbourne, though all cities did see an increase in August as we came out of that quiet winter period. But it was particularly strong in Sydney and Melbourne. To kind of put that in some context, Sydney and Melbourne both had their busiest end to winter in more than a decade, with both recording about 20% more new listings than they saw this time last year, which is a pretty strong outcome. In contrast, a lot of the smaller capitals, Brisbane, Adelaide, Perth, still lagging the sort of pace of activity that they saw last year. They're still ramping up for spring, but not as much as we're seeing in Sydney and Melbourne.
How do regional markets compare?
Regional markets are pretty similar to some of those smaller capitals. We are seeing activity ramp up as we head towards spring, but they're not really keeping pace with the sort of activity we were seeing last year. Across the regional areas, there was about 2% fewer new listings this August than we saw to end winter last year. So not a big difference, but still a little slower.
What does the increase in listings overall tell you about how the market is pricing interest rates and the potential for further hikes?
Yeah, it's a great question, and I think it shows that we're starting to see a bit more confidence from buyers and sellers around interest rates, particularly compared to what we were seeing, say, 12 months ago when the RBA was raising interest rates 50 basis points back to back to back. Compared to that period, I think we're seeing a bit more certainty, particularly from buyers who now know a bit more what their mortgage is going to cost, how much they can borrow, and therefore how much they're willing to spend.
Is the increase in listings being driven by owner-occupiers or investors?
We are seeing it for both, but investors are making up a bit of a larger share of property market activity at the moment, both on the buy and sell side. We're just seeing a bit more turnover from investors broadly.
Why do you think that is?
Yeah, there's a few reasons for that. I suspect part of the story is we've seen a big increase in mortgage costs and therefore the servicing costs for investors. For some investors, that may be making it unattractive to stay in the market. And on the flip side, we've seen investor credit, it's come off from the peak that we were seeing in 2021, but it hasn't fallen by as much as owner-occupiers, and so investors are making up a larger share of purchases. For those investors, potentially being enticed in by the fact that rental markets are just very tight at the moment. Rental vacancy rates are extremely low and rents are growing very quickly, and that's a combination that's probably attractive to some investors.
Do you expect the increase in volumes will test prices and recent gains?
Yeah, it's a great question, and it's certainly one we're going to be watching this spring. Prices have been remarkably resilient this year. We saw in August that prices nationally were up 0.3%. In Sydney, it was even stronger, up 0.5%. And actually, prices in Sydney have now almost recovered all of the losses that we saw last year. They're only about 1% below their peak before the RBA started raising interest rates. Having a little bit more stock on market probably will put a little bit of downward pressure on prices. But the big question is really interest rates. It looks like we're probably at the peak. There may be one or two to go, but that will really determine the trajectory for prices over the next 12 to 18 months.
Angus Moore, thank you.
Absolute pleasure. Thanks for having me, Kirsten.